Today, global markets are still responding to yesterday's events, in particular the policy statement of the US Central Bank and the US inflation data. As expected, the Fed Reserve maintained the status quo. At the same time, it signaled only one rate cut by the end of 2024, although 3 rate cuts were penciled in at the March meeting. This factor can be considered a hawkish signal, but on the other hand, the dot plot of future rate cuts points to the more aggressive agenda in 2025. That's the regulator plans to carry out 4 rounds of monetary easing, one after another, and lower the funds rate by a full percentage point. However, we should bear in mind that nothing can be predetermined. For example, the US Labor Department reported yesterday that the annual inflation rate inched down from 3.4% to 3.3%. But analysts had projected the CPI to remain flat at 3.4%, and this factor even forced Jerome Powell to note in a press conference that inflation dynamics were improving, but nothing more. He also warned that the regulator would decide to lower interest rates when consumer prices decline to the target level of 2%. In addition, market participants are worried about inflation uncertainty in the summer months in the United States. As a rule, gasoline prices rise, boosted by robust consumption activity during the holiday season. Remarkably, the US economy has delivered more than a few surprises in recent months, forcing Fed policymakers and markets into frantic readjustment. Perhaps something similar could happen this summer and thereby again make markets revise the plans of the US Central Bank. Yesterday, market sentiment changed sharply and the Fed Watch tool on the funds rate went down, and this in turn made the US dollar plunge across the board. However, it does not mean that the US dollar will gain bearish momentum. After all, interest rates in the US are still notably higher than, for example, in Europe. This fact as such works for the long-term strengthening of the US currency, and today the dollar index, which shows its position relative to 6 major peers, is trading higher within the intraday corridor of 104.60 to 104.90. Wall Street benchmark indexes again notched new record highs. The S&P 500, for example, jumped by 0.85%, and today the index is also trading higher within the intraday corridor between 5,309 and 5,447. Given the strength of the US economy and its resilience to high borrowing costs, the prospect of rate cuts next year gives a fresh impetus to the US stock market. In contrast, the state of affairs in the European economy does not cause much optimism. For example, today's report on industrial production in the euro area looked to decline to -3%. The consensus had expected a more moderate fall to -1.9%. So the position of the US dollar against the euro may already strengthen later today, after data on the producer prices is released in the United States. Already trading in Europe, the single currency was steadily holding near 1.08, and the euro-dollar pair consolidated sideways between 1.0804 and 1.0819 amid risk on market sentiment and a broad recovery in the US dollar. At the same time, a break above the critical level of 1.08 indicated the completion of the downward cycle which formed a few days earlier. At the same time, price changes in the euro-dollar pair indicate a possible overheating of the long positions which enabled a slight pullback. If the bulls are still able to hold the price above the resistance of 1.08, the euro will receive an additional growth impulse. If this scenario develops, the instrument will move towards 1.29, otherwise the one-week low could be updated. The prospect of a rate cut in the United States by the end of this year became a signal for growth in the oil market. Brent crude even traded above $83 a barrel at one point. Importantly, the price of the Brent benchmark rate has surged by almost $6 in just a week. In other words, Brent crude could now be overbought. If this is indeed the case, then we reckon a gradual decline in buying activity, and this may well lead to a price reversal. And we could be watching this move on the current chart. As you can see, the Brent price turned around and began moving towards $80 per barrel. You have watched a review of the global financial markets for today, June 13. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow.